Feeling overwhelmed by student loans? You're not alone, but there's no need to worry. While student loans might seem complicated, understanding them doesn't have to be. What's up, everyone? Welcome back to the channel. So today we are diving into student loans and everything you need to know about them. So in this video, we're going to break down everything you need to know about college student loans, focusing on two major players in the field, College Ave and Sallie Mae. We're also going to explore the types of loans that they offer, the differences between fixed and variable rates, repayment options, and how to choose the best loan for your needs. Whether you're just starting to look into student loans or trying to make sense of your options, stick around for a comprehensive guide that will help you navigate your way through financing your education. All right, so you generally can't go wrong with the first one on this list, which is College Ave, an online student loan portal that arranges loans and provides financial services for students using a few different banks. And that means they arrange lending for you, but they don't actually do the lending themselves. And the reason why I like them is that this is a really easy pre-qualification process right on their website that doesn't use a hard credit check, and that would reflect badly on your credit history. So you don't have to worry about it affecting your credit score. And then once you get pre-qualified, all of the deals that you are approved for and that you can get will show up right on their website. And only after you see your options will you go through the formal application, which will affect your credit score. So if you type in all the information right, you can see all of your options really fast and without it negatively affecting your credit, which not a lot of services offer. All right, so when it comes to their website, College Ave is really easy to use and is packed with a ton of helpful information about scholarships and loan financing. They do offer loans starting as low as $1,000 all the way up to your full tuition. They also have refinancing options if you already have student loan debt, which could help you pay less on that debt or even pay it off faster. Now, College Ave is a private lender, which means they can offer both fixed and variable rate loans. And if you don't know the difference, a fixed rate gives you predictable and unchanging monthly payments. And at College Ave, these rates start at 3.74%. But a variable rate changes based on market conditions. And at College Ave, they start at around 5.59%. All right, so if you do want to qualify for a loan from College Ave, here's what you need. You must be at least 16 years old, have a social security number, and be enrolled in an eligible school. For undergrads and international students, having a cosigner is also necessary, and the pre-qualification process is actually pretty quick, taking only about 3 to 4 minutes to see if you do qualify and to check potential rates. You'll then have options for various loan types, including undergrad, graduate, career, parent, or refinancing existing student loans. Now, after you select your loan term and your APR, College Ave will check your enrollment and make sure the requested loan amount aligns with the school's cost of attendance and academic progress guidelines. And once it's all confirmed, College Ave will disperse the funds directly to your school. Now, the benefit of being financed through College Ave is that, along with having pretty flexible terms, they offer a number of ways you can save on how much you pay on the lifetime total of the loan, starting off with making minimum payments while you are still studying. And if you are able to make minimum payments while you study, it shows them that you take your responsibility of paying back your loan seriously, and they do reward you by lowering your interest terms, just slightly. Also, you have the option of paying the interest charges each month while you're still in school, or you can pay a flat rate of $25 a month. Now, on the other hand, you can go for a deferred payment where you don't make any payments until after you finish school, but you're going to end up paying more interest over the life of your loan. All right, so I already mentioned the fixed and variable rates, and the reason that I recommend College Ave is that they're all about the students and getting you the best deal possible. They also have lower than average starting rates compared to other lenders in the industry, but their maximum rates are also much higher than the averages for student loans, going up all the way to 17.99% on both variable and fixed interest rates for undergrads. But their loans are structured to help you pay off your student debt as fast as possible, so they do encourage you to start paying while you're still studying. And those low starting rates are also there to help you get out of debt faster. And if you do decide that you want to try either College Ave or Sallie Mae, check out the affiliate links I left in the description below. It won't cost you anything, and we might earn a small commission, which helps out the channel. And sometimes we do have special deals that you wouldn't get if you went directly through their website. All right, so the next company has a name that's very familiar to a lot of Americans, which is Sallie Mae. They're a private student loan provider, and they started out as a federal student lender in the 1970s, and now they offer both undergrad and graduate loans as well as loans for trade schools, and they also fund part-time and international students. Now, compared to College Ave, Sallie Mae does have fewer options when it comes to repayment and even fewer choices for loan terms. And although they don't charge you any loan application fee, they don't have a pre-qualification process like College Ave does. So when you do fill out their online application, it will actually reflect on your credit history. So my advice is that you do your best to check and see if you qualify before you go through the process, because you don't want it to affect your credit score negatively. All right, so to apply, you're going to need to provide your basic information and details about your school and the semesters you're seeking funding for. You also need to know your school's total cost of attendance, which includes not only tuition, but also expenses like meals, equipment, and books. This information is usually available on your school's website. And like College Ave and many other lenders, your loan amount can't exceed your school's calculated cost of attendance. And if you have a scholarship or a cosigner, you're going to need to include that info. While having a cosigner, it's not mandatory. Most students without one will need a solid credit history to qualify for a loan. And even if you can get approved on your own, having a cosigner can secure you lower interest rates. So it is worth considering asking a parent or another adult who has a good credit history to cosign for you. All right, so once you have filled in all of these details, Sallie Mae will give you a document called a Loan Application Solicitation Disclosure with a pretty detailed breakdown of the rates, terms, and repayment plans that apply to you. And if it works for you, and you decide to go ahead, then Sallie Mae works directly with your school to disperse the funds. Now, when it does come to loan terms or how long you have to pay the loan back, Sallie Mae has fewer options than College Ave. They offer either 10 or 15 years for undergrad and career training loans, 15 years for MBA, law, and graduate school loans, and 20 years for medical or dental school loans. And their minimum loan amount is $1,000, and the maximum is 100% of your school's certified expenses, with a standard late payment fee of $25, which brings us to repayment plans, where you have three choices. You can pay interest or a set amount of $25 a month while you are still in school and during the 6-month grace period after you finish, or you can start paying after you finish studying and the grace period is up. Obviously, it's best to pay as much as you can while you are studying if you are able. Now, that being said, the most important thing is the rate, and Sallie Mae offers a bunch of different rates, but because I mentioned undergrad rates for College Ave, we're going to see how Sallie Mae compares in that respect. All right, so for fixed undergrad rates, Sallie Mae starts at 3.74%, which is the same as College Ave offers, and it goes all the way up to 15.49%, which is quite a bit lower than College Ave's highest rate of almost 18%. And when it comes to variable rates, Sallie Mae starts at 5.37%, and their maximum rate is 15.70%, which is quite lower than College Ave. So, to wrap it all up, navigating the world of student loans can be daunting at first, but understanding your options is important if you want to make the right decision. And we've covered everything you need to know about them and also explored the ins and outs of College Ave and Sallie Mae, highlighting each one's unique features and benefits. So whether you are just starting your college journey or looking to refinance, knowing the details about student loans can help you make informed decisions about your financial future. Remember, education is an investment, and choosing the right loan, well, it can set you on the right path to success. And that's all for this video. If you found it interesting or helpful, give it a thumbs up and subscribe to see more videos just like this. And just to reiterate one more time, if you do decide that you want to give College Ave or Sallie Mae a try, check out the affiliate links down in the description. Also, if you are interested in working with us or sponsoring a future video, just reach out using the email in the description below. And as always, I enjoy hearing your thoughts, and I'll try to get back to any questions or comments you leave down below as fast as I can. Finally, guys, thanks so much for watching, and I'll see you in the next one.